Russ Koesterich says the markets have largely already baked in this week's good economic news. He's the global chief investment strategist at BlackRock. Russ, welcome back. If the markets have done, as you suggest, in many segments of the market at least, and already baked in the good news, what does that imply for what investors should do now?
Well, right now, markets are benefiting from the environment, and you've got growth accelerating, you've got low inflation, and rates are low, and that's the good news. The problem is that a lot of the parts of the equity market already reflect that good news. In other words, they're pricey. So we still think investors should stick with stocks. They're still cheaper than bonds. Cash yields nothing. But it really is a matter of picking your spots and finding those part of the equity markets that are still relatively cheap and have got a little bit of concern or pessimism in the price that gives you some wiggle room if things turn to the downside.
And where do you find those places where there's pessimism in the price?
I think there are a couple places that still look to us to be cheap on a relative basis. Again, nothing is really cheap on an absolute basis, but compared to the broader market in the U.S., large and mega cap companies look to be cheaper than small cap companies. Many cyclical parts of the market, energy, technology companies also look reasonably priced. And then our large recommendation is for investors to cast a wider net. And if you've mostly been investing in the U.S., look at markets in Japan, look at markets in Europe that are much cheaper than U.S. stocks.
Do you think Europe can turn around based in part on what Mr. Draghi did earlier this week? So you, I guess, would be putting money there.
Certainly what Mr. Draghi did is going to help. You know, Europe has got significant headwinds, but again, going back to my comment before about what's priced in, the thing to remember about Europe is much cheaper than the United States. So while growth is going to be lower, while we're likely to see lower profitability from European companies, those facts already reflect in the price. Another market we'd look at, Japan. This is a market trading about 1.2 times book value. That's less than half the U.S. And again, Japan's got a long list of issues people could point to, but what we would say is that a lot of those issues reflect in the price, and Japan is also likely to get a tailwind from its central bank that's going to keep easing long after the Fed starts to tighten.
How's the U.S. economy doing, Russ?
The economy is doing better. I say better sort of with a little bit of sarcasm because it's not great. We have seen an improvement in the labor market. We're really back to where we were in late 2013. The U.S. economy is printing about 190,000 jobs per month. That's an improvement from the winter, but it's not what you'd expect with a more robust recovery. And I think the key is, while we are improving, there's still these large structural headwinds that are acting to hold back the economy. And they include the fact that wages are slow for a lot of middle-income families, and we still have a lot of people that have dropped out of the labor market. And over the long term, if they don't come back in, that is another drag on growth over the long term.
Russ, fantastic to see you. Thanks very much.
Thanks,
Russ Koesterich with BlackRock.